Imagine waking up this morning, checking your phone, and seeing silver up 6% in one day. That's not a typo. That's not a glitch. That's $93.66 an ounce. A move so violent that traders are still trying to figure out if this is a squeeze, a war premium, or the beginning of something so much bigger. And here's the part that'll keep you watching until the very end of this video. Bank of America just put out a target of $309 an ounce. Citigroup is calling $150 within 90 days. And a handful of algorithmic models, they're screaming $430 by December. Now I'm going to walk you through exactly what's happening, why it's happening right now, which mining stocks are poised to absolutely explode, and what the smart money is doing while retail investors are still asleep at the wheel. Stay with me, because by the end of this video, you're going to understand this silver market better than 99% of people watching the news right now. Before we dive into the data, I need to break something down for you that is genuinely alarming, genuinely exciting, and genuinely a once-in-a-generation kind of moment. So if you haven't already hit that subscribe button, do it right now, because this is exactly the kind of deep analysis that will make the difference between being prepared and being blindsided. The numbers. What just happened? Let's start with the facts, because the facts alone are insane. As of March 1st, 2026, spot silver closed at $93.66 an ounce. That's a $5.50 jump in a single trading session. That's a 6.25% move on one of the most traded commodities on the planet. COMEX March 2026 futures, $93.29, up $5.70 on the day, opening at $89 and never looking back. Volume, 51,900 contracts. Traders weren't just watching this move, they were piling in. Now here's some context that'll make this even more jaw-dropping. Silver already smashed through $90 last week. And when it did, the CME actually halted trading. The CME halted trading on silver. Peter Schiff called the halt, quote, better than telling the truth. Eric Sprott went on record talking about a potential $300 silver squeeze. And analysts who were laughed at for calling $100 silver 2 years ago are now being quoted in Bloomberg. This isn't hype. This is a market in full breakout mode. Why? This is happening right now. Now you might be asking, why now? Why is silver exploding in March of 2026 after already having one of the most historic runs in modern memory? I'll give you 3 reasons, and each one alone would be enough to move this market. All 3 together, that's what you're seeing right now. Reason number 1, the physical squeeze is real. COMEX silver inventories are strained. We're in the 6th consecutive year of structural supply deficits, meaning demand is outrunning production by roughly 67 million ounces annually. That's not a short-term blip. That's a structural imbalance that's been building for years, and it's finally showing up in prices. Reason number 2, industrial demand is through the roof. Silver isn't just a shiny metal you hold in a safe. It's inside solar panels, inside electric vehicles, inside AI data center cooling systems, inside your smartphone, and global demand from clean energy alone has gone vertical. Solar installations globally hit record levels in 2025, and every single panel uses silver. The more solar panels we build, the more silver we need, and we cannot print silver. Geopolitical fear premium, Iran-USA tensions are now the #1 driver of today's move, according to market analysts. Any escalation in the Strait of Hormuz, where 20% of global oil flows, sends a shockwave through every safe haven asset. Gold, silver, especially silver, because it has both the safe haven premium and the industrial demand story working simultaneously. This is the triple threat that has silver traders absolutely fired up right now. The price targets. How far can it really go? All right, This is the part of the video you came for. Let's talk about where silver goes from here. And I'm going to give you the real range, from the conservative institutional view all the way to the most aggressive calls on the street. The conservative camp, $70 to $90. JP Morgan's latest update puts the full year 2026 average at $81 an ounce. That's actually more than double 2025's average price. Even the bears here are bullish. Their model sees a dip to $75 in Q2, then a rebound back toward $85 by year-end. Nothing wild, but still very strong. The mainstream bulls, $100 to $150. Citigroup, one of the biggest banks on the planet, just hiked their short-term target to $150 an ounce. They're calling silver gold on steroids right now. They had $100 by March, then $110 by end of Q2. Now they're talking $150 within 90 days. Gold-silver analyst is projecting $175, saying 2026 will actually outperform 2025's monster run as solar and AI demand explodes further. The high-conviction blow-off targets, $300 to $430. Bank of America's Michael Widmer, a standout call on Wall Street, has silver at $135 to $309 per ounce by end of 2026. His math is based on the gold-silver ratio, compressing back to the historical extremes. If gold hits 5,000 and the ratio touches the 2011 low of 32 to 1, that's 135 silver. If it goes full 1980 Hunt Brothers squeeze at 14 to 1, 309. DMO's bull case goes to 160 this year and 220 by 2027. And algorithmic momentum models? Some are printing 430 by December. Now, I'm not telling you to bet the house on 430 silver. What I am saying is that the floor looks higher than it's ever been, and the range of outcomes has never been wider. This is the kind of market where position sizing and timing matter more than ever. The mining stocks, where the real leverage is. Here's something Wall Street knows that most retail investors don't. When silver moves, mining stocks move more. Way more. We're talking 2x, 4x, sometimes 8x the move in the metal itself. The total silver mining sector market cap right now sits at $334 billion, and it's growing fast. Let me break down the top pure-play silver miners, because these are the names you need to know. Fresnillo, ticker FNLPF, is the world's #1 primary silver producer out of Mexico. $42 billion market cap, up 2.6% just today. This is the gold standard of silver miners. Pan American Silver, ticker PAAS, is the largest producer by output in the Americas. $29 billion market cap, clean balance sheet, diversified assets across multiple countries. This is the sleep well at night silver miner play. First Majestic Silver, ticker AG, is the pure play king. They produced a record 15.4 million ounces in 2025. They even sell physical silver directly to retail investors through their own website. Up nearly 3% today, and analysts are still calling significant upside from here. Hecla Mining, ticker HL, is the lowest cost US and Canadian producer. Record revenue last year, posted strong guidance for 2026, and regularly pops up in analyst upgrade notes. If Bank of America's $135 target hits, the math on these miners gets very interesting very fast. Margins don't just grow, they explode. And the smaller, high-beta names like Endeavor Silver and Avino, those can move 3x, 4x what the major producers move. That's the risk and the reward with junior miners. If you want torque, that's where you find it. If you want stability, stick to PAAS and Fresnillo. The risks. What could kill this rally now? I would not be doing my job if I didn't talk about the risks. And in a market this hot, moving this fast, the risks are real. Parabolic moves invite corrections. We've already seen multiple 20 to 40% pullbacks in this silver rally. Anyone who bought the top of a silver spike in the last 12 months knows exactly what that feels like. A stronger US dollar, triggered by a Fed surprise or a risk-off macro event, can slam commodities across the board. A recession that kills industrial demand would hit silver harder than gold because of silver's dual nature. Goldman Sachs has officially flagged silver volatility as extreme. That's not nothing. And the strategist Marko Kolanovic, formerly of JP Morgan, is still circulating a note calling for a crash back to $50 if the rally unwinds. The point is this: the bull case is compelling, but this is not a set-it-and-forget-it situation. This is an active, high-volatility market that rewards discipline and punishes FOMO. How to think about trading this? This is not financial advice. I am not your financial advisor. What I'm going to do is walk you through how experienced silver traders are thinking about this market right now, and you can take that information and do whatever you want with it. The highest conviction setup right now, according to most of the analysts we've covered, is leveraged silver exposure through either the AGQ ETF, which gives you 2x the daily move on silver, or through the top pure play mining stocks we just covered. The ratio play is getting a lot of attention too. Gold is sitting around $5,300 an ounce. The gold-silver ratio right now is about 56 to 1. If that compresses toward the 2011 low of 32 to 1, which is what Bank of America's base case assumes, silver outperforms gold significantly from here. For the more conservative approach, PAAS and Fresnillo give you silver exposure with established operations, strong balance sheets, and less blow-up risk than the juniors. Here's the discipline rule that matters most in a market like this. Know your exit before you enter. Set your level, size your position accordingly, and do not let a hot market turn you into a gambler. Closing look. Silver just had one of the biggest single-day moves in recent memory. The structural backdrop, deficits, industrial demand, geopolitical tension, central bank buying, has never been stronger. The price targets from serious institutional analysts are the most bullish they've been in decades. Whether you're a stacker, a trader, or you just want to understand what's happening in this market, I hope this video gave you a clearer picture of what's going and where this thing could be headed. If silver hits $150, Citi's 90-day target, this video is going to age extremely well. If it corrects back to $75 first, that's your opportunity. Either way, you're informed. Drop a comment below. Are you bullish or bearish on silver right now? I read every single one. Hit like if this was useful. Subscribe if you want to stay ahead of moves like this one. I'll see you in the next video.